Welcome to Odds and Ends with Rob Friesen and Dave Singh. This is a StockOdds podcast to get our bearings on the week and help you learn more about StockOdds. Hey, Rob, how's it going?
Not too bad. I mean, I don't think your voice and your last name really connect.
Too much singing, huh?
Yeah, you're still hurting a little bit on the voice side.
Oh, no.
That's from yelling at your dogs all the time. That's what it is.
Or the kids.
Or the kids. That's what you get for having so many of them, right?
I can't even blame the weather, right?
Lose your voice. All right. Well, hopefully you can get through this here. You got some research you pulled together, so why don't you take it away?
Yeah. So we're not in the beginning of the month right now. We're kind of early for mid-month seasonality. So the almanac really isn't as critical at this kind of moment. So I thought we'd look at some of the macro things and focus on, we've got geopolitical risk, Ukraine, Russia thing, Saudi Arabia, oil still at a really high level. China just opened up from their Lunar New Year, so they're a bit bullish. So we've got all these kind of macro things going on right now. And we want to take a look at some of the sectors that have been doing well. And maybe this is a week to just press strength and look for weakness in the major sectors that are out there. Consumer cyclicals, energy have been great on the week. Technology is starting to turn around. But according to the almanac, too, on Monday, tomorrow, things like gold might do better, and the ARK funds and biotech. So it's a little bit risk on, according to the stats. And for mid-month seasonality, again, ARK funds, solar stocks, things like that. So as far as the stats go, we are positioned for a bit of strength coming into the week, but some of the macro is still weighing on the market. And in terms of big cap versus small cap, I mean, we would expect typically small cap to be doing very well at this moment, but it's still underperforming on a 3-month level, on a 1-month level, even on the week. So it's mega cap and large cap that's really outperforming small cap. And even the advancers to decliners, we're seeing so many new lows happening in the small caps, yet the large caps are still holding in there. And then I took a look at which countries are doing best too. And there's some interesting data there. Things like Brazil, South Africa, Australia are doing really well this year. They're all up 5% to 14%.
All commodity related countries.
Yeah.
Right? You know.
And things like Singapore, Malaysia, the U.S. is down. So things that tied to consumer cyclical or finance, those tend to be underperforming in a global perspective. So there's something interesting there with real assets, right? I mean, commodities and energy. And those are some of the big sectors there. How about some of the news that you've picked up on that tie into those sectors, Robert? What do you see?
Well, the big news of the day is North Korea funded their missile program through stolen crypto. I guess now we know what crypto is good for. Firing rockets. So, yeah, I mean, well, this week we got CPI on Thursday. That'll be a big one. That's the January, and we expect it to be coming in at around 7.3, which is over the 7.0 of December. So that's the big thing for this week. I mean, China's coming off of its Lunar New Year, and so it's just markets open, and I think they're trying to play catch up to what we saw in our markets rally a little bit, right? Yeah. That being said, we bet. Did you see the last 15-30 minute sell off on Friday? Right, we did tank and give it back a little bit there, but our markets are not as boisted right now as China. So China's a bit in the lead at the moment for coming into tomorrow. Let's just spot check our futures here to see which one's winning the foot race here. So right at the moment, the Dow futures are down 0.21%. S&P futures are down 0.22, so pretty similar there. Nasdaq's down 0.28, and the Russell is down 0.53. VIX has risen a little bit before. Now it's back down a little bit at minus 0.25. So it seems that we've had a bit of our bounce, right? And I don't think we're out of the woods altogether, because we still have March coming up. We still have the anxiety of rate hikes and things like that. And we've seen such a shift to value and away from growth, and we just don't see as many retail. I mean, that's pretty evident in how Robinhood stock has performed. You know, there's been a big decay in that stock. It's, what is it, down 80% off the high or something. So it's, you know, it's saying that there's not as much retail activity. So what's probably happening again is hedge funds, you know, a little bit more comfortable to put shorts back on, you know, this last quarter and into this year than they were previously. Also deleveraging in some of the growth names, and I don't see that stopping entirely. I think we saw this last week money come back into some of those areas, and now we've got kind of an interesting landscape. An example would be how crushed Peloton was, and then we have the rumors of, you know, potential merger with Amazon. It's weighing a bid, right? So nothing confirmed for sure, but you know, when these stocks that were extremely overvalued do come back down, let's see, its price to book is 4.92, so its book value is only $5, and it's still trading at 24.60. So it didn't have any earnings, right? It's losing 634 million. So it's still losing money. It has no income, and its debt's, you know, not crazy, but it has some debt. But compared to where it was, yeah, it might be viewed as a pretty good steal now. So this is what we're going to be dealing with here is we may get more consolidation because of the pullback that we've had. We also might have this theme continuing of sort of value and things like that. So it's going to be a little bit tricky to you know, to change it up every single day. So you kind of want to, you know, work with your baseline. And what would you say is your best case baseline right now? Like, is there obvious groups that you would say, I don't think I'll short this group, or I don't think I'll buy this group?
Well, energy, it seems like it's still strong, and that's something I really don't want to short. But technology, we see kind of a rotation. The stuff that was beat up the most this past week tended to come back quite strong. So it could be dangerous to short the things that have done the worst so far, because when they do turn around, and like things like solar, it's down 22% on the year, but this past week it rallied 8% up, right?
Well,
And
yeah.
Yeah.
Well, I know. I mean, and like, you know, with the merger thing, you know, Peloton after hours popped up to, I think it was up 48% at one point. So, I mean, like, you can get seriously run over, you know, not just from an ordinary, you know, reversal and rally, but, you know, when you get these type of things happening, that's pretty serious. Like, if you're, you know, it may not seem like a lot from how far it's come down, you know, but if you're shorted, to lose 48% on one stock would be, you know, quite annoying, right?
Well, that kind of suggests that this kind of week we really should just be balanced within sectors, right? Don't have an opinion that one sector is going to continue to rally or revert, but maybe be mixed within each of the sectors for the coming week with the kind of action we're seeing here.
Well, I think there's a tremendous opportunity for pair traders, you know, to look through these things and actually put on some pairs. I remember a situation similar to this after the you know, 2000 correction. We melted down in you know, 2000 to 2002 kind of thing. But after that period of time, when I was working the pairs, I remember being in positions and a merger would be announced, and I was like, lo and behold, I was long the merger stock, right? So, you know, things like Dick's Sporting Goods against the Sports Authority and things like that. And it was like nothing wrong with Dick's Sporting Goods, but it was overvalued compared to the Sports Authority, right? And so Albertsons, all kinds of different names that we purposely put the pair on because we were looking for those ones that were more beat down, the ones that were more of a value proposition, the ones that, you know, just fundamentals were generally better, but the stock was, you know, in a discounted mode. So if we could find some of those, they could be great for pair traders. I think this is really, you know, next couple of years here should be really good for volatility. I think there's still more surprises to come, more unintended consequences from things that have happened through, you know, authorities around the world. And then we have, you know, the more fundamental mean reversion going on than we've had before. So I think the next couple of years are pretty good for pair trading. And that lends itself too to basket trading, meaning this, that, you know, if you see the wind behind something, and even if you don't want to hold it overnight, that can still be the stock that you go into the next day and do it all over again. So don't forget that a stock that's in an uptrend can often open down a little bit from where it closed the day before and then continue on with its relative strength. So same thing is true if you look at some of these stocks that have descended. Look at how Peloton, for example, got down to where it was. Look at, I mean, they can pull up just tons and tons of growth stocks. Let's look at Robinhood for a second here. Look at how it got to where it is now. I mean, many of those days it opened up a little bit and then sold back down, opened up a bit, sold back down. So when things are declining and they happen to open up, that can be an invitation for people that still want to sell to go, hey, well, that's a good price. I think I'll get out now. And then, you know, if they're short selling, that can pick up too. So in a descending mode, often you get a little bit of a lift and then it sells back down. In an ascending mode, you get a little bit of a discount and then it rallies. And there's actually a fundamental reason why that happens. Do you know what that would be, Dave?
I mean, if people have, if something is trending downwards, those that have lost just want to get out the next day, right? So they're willing to kind of get a bad price, and it goes against them.
No, but why would a stock that's rallying day after day, why would it possibly open a bit lower than where it closed and then keep on going up again? So it would cross through its previous day's close, it would cross through its previous day's high and continue on its journey. Why does that happen? Well,
yeah, because is it because the investors have? Go ahead.
I can answer it for you. I'll make it easy for you here. Okay, the reason that happens is because there's institutional activity, and sometimes when things close quite rosy, the institution might go, okay, well, this is a great time for us to unload some of the stuff that we had planned to do anyway. So they'll put in a bigger order for the next morning, and they'll sell it on the open. And the other thing is, the designated market maker might have gone home with some inventory, and he's looking for anybody that wants to sell. He might, you know, raise a little bit of selling action on some phone calls and get some big sellers to come in. And so a strong stock can open down, and then once that's flushed out after the open, continues to rally up. So those kind of stocks, the opening crossover move is a really good move, or crossing over the previous day's close is very good as well.
You used to have a strategy, the Petra pair trading strategy. Does that exploit the same phenomenon?
Well, yeah, I mean, to some degree, but with that particular trade, that's with pairs extended trading range at the end of the day. you give yourself a 2-for-1 proposition on a 1-for-1 bet because you are putting it on before the close, so that if it comes in when the hot money comes out of the market, you might make a profit there and not even have to hold it overnight. But if you do hold it overnight, you're going for that bit of a retracement for the next morning's open. And if you don't get it, then of course, you can take it for another time frame if you want, or just flatten out. But it's there is a mean reversion between stocks, that are quite related. Maybe they're in the same industry, maybe there's some segment overlap, and they get extended from each other by the end of the day. Often you can see that come in before the close even, or come in the next day. Okay. So I think what we're going to do this week here is we're going to be cautious on the oil trade. We do see that commodities in general, should be still somewhat favored. Now the problem with gold is that it typically, if the Fed is going to be more aggressive, it typically doesn't do that well in interest rates raises, and neither should Bitcoin actually do that well, because the whole argument for Bitcoin was, hey, if the Feds are printing money like crazy, then they're going to devalue the dollar, and then Bitcoin should be worth more. But if the Feds are going into they're tapering now, and that should be done by March, and then interest rates cycle is rising, then the Bitcoin argument isn't as robust anymore. Do you follow what I'm saying here?
Yeah.
So gold and Bitcoin should not do that well. And, technology stocks, it's going to be some that do pretty good. There is the look at what happened here on Friday, even with how we finished the day. Microsoft was still up, right? CRM was up, Nvidia was up, Avco was up, Adobe was up, right? So even at that end of the day sell-off, there was a lot of good, healthy tech stocks that were up. So you can't just brushstroke across all of them, because they're not all in the same league. Texan was down. So how's Texan compared to Avco, or how's Texan compared to AMD or Xilinx? AMD and Xilinx are in a merger, but how does Texan compare to Nvidia? Like, why was Nvidia up and Texan down? There may be a reason for that. Anyway, here's the closing statement. When you don't have clear information about a particular group, then stay fairly diversified, right? Don't take a side. When you do have information like, the Saudis are raising oil prices, oil's still in demand, we still got a bottleneck, we still have the drum beats of war, whatever, then let's not expose ourselves too much to the short side, right? So you could eliminate, you don't have to be in the group at all if you don't want, or you could just be on the long side, or you could have you could go long and then say, okay, well, I'll have a couple ETFs like XOP and XLE and things like that standing by to hedge with if I want to. So when you don't have clear information, then try to be diversified and fairly balanced. When you have a clear read, then you live or die by the discretion that you choose. So if you say I am only going long oils and you're wrong on the oils, then you're going to feel it, right?
Yeah.
And so there's nothing wrong with it. It's just that the trader has the opportunity to add some discretionary decision making in the mix, and they may benefit from it, but they also may be hurt by it.
All right, Good thoughts.
Just one more thing on the groups. So as far as how we finished the week here, the nano was in charge for the week. Micro, mid, large, and mega, and small. It's really quite strange. So how the week finished with nano in charge. I guess nobody has any money left except to buy the nano.
Well, maybe it's just the really crap stuff is turning around, right? It's been so beaten up.
You can't even. You got to bring out your microscope to find the stocks. Anyway, but on Friday the mega did still come out on top, and nano was about fourth on the list. But just for the whole week, it was nano. That's funny. Yeah. Anyway, have yourself a good night, sir.
All right. Good thoughts. Thanks. Good luck.
Take care. Yeah.